I'm Kerry. I'm the host of Best of Us Investors. We're a channel that is trying to build a website and a platform to help you make better investment decisions. And I know one of the investment decisions that you want to make, and a lot of people want to make, is should I buy Tesla stock now? They just came out with their earnings report, somewhat disappointing. But what I want to say is that Tesla stock is overvalued and should be selling for something less than $100 per share at this time. I have gotten very into fundamentals, and the fundamentals on Tesla just do not support its price and are totally disconnected with reality. Tesla has a declining return on invested capital. It's burning cash like no other stock, and it's got falling margins, and the company is not selling all the cars it makes as it had in the past. To justify its current stock price, Tesla would need to improve its return on invested capital to levels that have not been achieved by the best companies in the world. So that's what I want to do in this video and I know it's not going to be popular, but I think you need to have an understanding from a fundamental point of view. Is Tesla worth the $260 it's selling for now, or is it actually worth something less than $100 per share? This is not financial advice.
Best of Us Investors presents Kerry Griegmeyer.
Tesla's business is generating an impressive return on invested capital, which is one of the measures of a company's profitability and its future, especially an automaker. However, the return on investment capital has been declining over the last 12 months. Tesla must improve its return on investment capital to levels that haven't ever been achieved by even some of the most profitable companies in the world to justify its current price. Tesla's multiple price cuts, both here and in China, along with the lackluster production levels through the first half of 2023, raise questions about how much demand there actually is for Tesla vehicles, especially amid the competition that is being thrown at them from Ford, General Motors, and virtually every other automaker. Second quarter 2023 is the fifth consecutive quarter in which vehicles produced were greater than those vehicles sold. So this is a trend that Tesla is now starting on, and to stop that trend, they're lowering prices, which are lowering their gross margins. Despite Tesla's top-line growth, it continues to burn capital. Over the past 5 years, Tesla has burned cumulatively $4.2 billion of free cash flow, including the $3.6 billion over the last 12 months. So you can see this downward turn is gaining speed. While Tesla has rapidly increased its vehicle production and deliveries, it makes the share must increase almost exponentially to justify the expectation baked into the current stock price. As it stands, Tesla holds a meager share of overall vehicle share of market across the United States and including Europe and China. In Europe, based on the sales from 2023, it holds a 12% share of the EV market, while VW holds a 20% share and Stellantis holds a 14% share. In China, also based on sales of May of 2023, Tesla holds a 9% share, while BYD holds a whopping 38% of market share. I know, Homer, Tesla is just not just another auto company, but it has multiple towers of income, including that of insurance, solar power, housing, and yes, even robots. Regardless of these other avenues of income, when I should throw in that Ford and General Motors are going to be buying electricity from Tesla as well. Tesla's revenues currently are concentrated in the sale of automobiles. 86% of Tesla's revenues come from the sale of automobiles. And wait, Here's the bad news. 50% of those revenues come out of China. And we know that our relations with China are getting more and more tenuous as each day goes by. In order to justify Tesla's current price of around $260 per share, it would need to generate $1.7 trillion in revenues in 2032. That would be almost twice the combined revenues of Toyota, Stellantis, Ford, General Motors, Honda, and Nissan, its 6 competitors. If we assume that Tesla's margins stay at about 11.5% where they currently are, and that revenues grow at a rate between 23 and 27% per year between now and 2032, and its capital growth rate of 8%, then the stock price would be something in the neighborhood of $93 a share, something in the neighborhood of 68% down from where it is now today. In other words, if Tesla is going to stay on the trajectory and the price that Cathie Woods and Elon are projecting, that of a 10x increase, which would bring its price up to $2,600, it's going to have to perform better than any stock in the history of the stock market, including Apple, Microsoft, and Amazon. So it's going to become an anomaly. And Cathie Woods and Elon Musk are going to defy the logic of finance. And you are going to push that price to these extraordinary levels with no real reason to do it, or any reason that can be substantiated with a pencil and paper. Well, let's face it. Tesla is built on Elon Musk's personality. And I can only think of a few other situations where that has happened or is happening. And for the most part, that is in the music industry. I would say that Elvis Presley performed beyond expectations. I would say currently Taylor Swift is doing the same thing. Maybe Beyonce. Maybe that's what Elon Musk is. He's not a car maker. He's not a technology genius. He's a performer. And his performance are justifying the outrageous prices that people are placing on him. Again, Elon said in the call that it could be a 10x. Cathie Woods insisted it will be a 10x from here. Elon then pulled back and said, well, maybe it's only a 5x. I'm sorry, but if that's the case, then we as investors have lost all our sanity and all our understanding of how business works. That could be true. And I would say I saw it. I saw it with AMC, NTFs. I'm seeing it with Bitcoin. Maybe this is the new reality. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I have to fall back on what I know. Excuse me if I offend you. If you are happy with Tesla at 260 and you believe it's going to 2,600, go for it. But the risk is not worth that potential reward, in my belief. I believe that it would be something that has never happened before, and then you've got the Chinese factor in there. 50% of their money is coming out of China. I honestly believe that Xi Jinping someday will walk into the Tesla factory in Shanghai and pick up the keys and tell Elon to go home. I believe that in my heart, and I could be wrong. I hope I am, for many of your sake. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I'm building a website that I want to be your source for everything financial. I'm building my portfolios around my belief that the true future in investing is built around change. And the change that is happening right now is around artificial intelligence and machine learning. And these two elements are requiring us to rebuild the internet, to bring it up to the capability to handle the amount of data that's going to be moving through those coaxial cables from your computer to their servers and back. In order to keep up with that whole industry has to be rebuilt. That's why there are stocks that are up 500% year to date in that category, in the semiconductor industry. That's why NVIDIA is exploding. The whole world is changing. It's not built around a personality. It's built around the change that is going to happen. This is comparable. What's happening right now in artificial intelligence and machine learning is comparable to the invention of the telephone or the TV. And I was thinking the other day, go in your house and find me a tube TV. What's happening in the internet world, in the computer world, is you've got a tube TV and you're replacing it with a flat screen TV. And the whole industry is changing. You're taking the antenna off the roof of your house, and you're going into streaming. That's what's happening in the computer industry and the internet industry, and that's where the growth is. And if you can find those companies that are going to supply the materials needed in those new computers and those new lines and this new era of artificial intelligence and machine learning. And if you can come to an understanding of what Microsoft's Copilot is going to do to the business world, if you can absorb that, you have an investment opportunity of your lifetime. And it's going to happen fast. It's not going to take 20 or 30 years. It's going to take 3 to 5 years. And if you're in the right place and you own the right stocks, like I believe I do in my Bus 13 and my Bus 12 portfolios, I'm going to make a hell of a lot of money. And then I'm going to take this knowledge that I've acquired and apply it to my business, and I'm going to build a unicorn. So if this is the kind of information you want to share in, and if you've got some opinions about it that you want to share with me, join my tribe. That's all it is. Get on the bus. And right now, the bus is filling up. So your opportunity, there is a limited number of seats. I hope to see you in our tribe.